So what's good everyone, we are back with the update for the week. Like we talked about in our previous video that IT stock was on the verge of breakout, right? It was forming a double bottom formation over here. This W formation is called double bottom, right? So it broke out last Thursday from this double bottom formation, and now it can be considered safe to take entries on the IT stocks, considering that those particular stocks are also breaking out from their own solid base patterns. Talking about IT stocks, we have KPIT Technologies. This is an IT stock and it's forming a cup with a handle over here. This is forming a particular cup with a handle or a VCP type pattern formation, and if it breaks out about this 734 to 735 area with the support of volume is the keyword over here, with the support of volume, then KPIT Technologies can be an important buy that can give you those exponential returns that previously stocks like IRFC and Hariom Pipes have given to us. We will talk about IRFC and Hariom Pipe later in this video, right? So talking about fundamentals of KPIT Technologies, it's an IT stock, right? The business particularly is about architecture and engineering activities. If you want to dwell deep into the business, you can check out websites, etc. But for me, it doesn't matter as much as it matters with technicals and forming solid base patterns, right? So it has an operating revenue of 2000 crores and an annual revenue growth of 21%, which is considered outstanding as per the benchmark set by MarketSmith, right? It has a pre-tax margin of 14% and return on equity is 20%, and the best part is that the company is debt free, right? It doesn't have any kind of debt which we see with modern IT startups like Zomato, etc., or product based companies. And one more interesting fact about this company is Massachusetts Institute of Technology, MIT, owns 3% equity of this company. So there must be some interesting stories about it, but we might explore it later, who knows. But for now, KPIT Technology can be a good buy if it breaks out about the 735 level, right? Moving on, we have Sincera. About Sincera also we talked about in our latest video, which is here. We talked that Sincera broke out from this symmetrical triangle over here, right? And after breaking out of this symmetrical triangle, it has given around 9 to 10% return, but to be on a safe side, I waited for it to close about this green line, right? It was forming a VCP type formation. I have drawn over here to show it. It was forming a VCP type formation, and today it seems to be breaking out of this 800 area, but I don't see there's quite a bit support of volume. So the 50-day average volume is 76,000, right? And for me to take entry in this stock, it should be like at least double of this volume, or at least 50% higher than this average volume, right? So let's see what happens by the candle closing. This video will be uploaded after candle closing, so you can check out how much the volume has given. Or if it's possible, we'll wait for a couple of days to give a strong breakout with the support of volume. So what happens if volume is not present? This means that institutions are not buying that particular stock, or institutions are not interested. If institutions buys a particular stock, they buy it in huge quantities, and thus we see a spike in volume, right? So yes, details about Sincera's fundamentals also we talked about in this previous video, so we don't go much deep into fundamentals. We just check out if the company is debt free, how much is revenue growth, profits, etc. So we also talked about a hotel stock, right? That's Lemon Tree. It's a chain of hotels spread through various cities. It was forming a rough double bottom type formation in daily charts, right, over here, and it broke out about 97 with the support of volume. But since then it's retracing and the volumes aren't significantly present, so it's a good sign in my opinion. When a stock pulls back or when it retraces, there shouldn't be much strong of volume, right? So right now the candle is indecisive. It's like forming a doji pattern type formation, so there's no need to wait because it's roughly up 2%. But let's turn on moving averages. So moving averages are quite extended, but since markets are in uptrend, Nifty 50 is in uptrend, small cap index is in uptrend, as well as mid cap index is also in uptrend. So we'd rather wait for a stock to close below this 50 days moving average before booking lows or a previous swing low. So here it's a swing low, right? So if it closes below this, then let's say we can book our losses or we can get out of that particular stock. But right now we won't sell if it closes below a 10-day exponential moving average or 20-day simple moving average, right? So if you want, you can buy it over here, or you can buy when it tests this area of 97. So moving on to TMB, it's a banking stock, and we talked about it in our very first video about stock market that was there 13 days ago. It's forming a strong pattern. It was consolidating for quite a long, right? It's an IPO stock and it was consolidating since September. So it finally broke out on last Thursday, right? And on top of that, it broke out with support of volume. That means institutions must have bought that particular stock. But right now it's giving big wicks, right? That's not a good sign in my opinion. So big wick basically means that the price went up, but bulls were not able to sustain it, and bears pulled back down the price to a lower level, right? It's once again forming a wick, but I took the entry on it anyway because markets are looking bullish, and when markets are bullish, most of our bets work out, right? Unlike when it's consolidating or when the markets are in downtrend. So there are high probability for our bet to be turned correct. So it's roughly up 2% from its breakout point. It fall further back while we were recording this video. So right now it's around 2%, right? So yes, if you want to buy it right now, then you can buy, or you can wait for it to fall back over this area, right? And the next stop loss can be if it falls below this swing low, if it falls below 500 level. So those are particular stop losses which I am sharing with you in advance. So moving on, next in my list is all of our mom's favorite.
Everybody do the flop!
I have broken out from a potential cup and handle pattern. It formed cup over here and handle over here, and look over here, today it broke out and it has slight support of volume, right? Actually it has the 2x support of volume which we need. Okay, so I might add Kalyan Jewellers. By the time the candle closes, it's almost 5% up from the breakout point, but that's okay. I can bear that much risk if it doesn't work and my stock, I have to sell it when it hits the stop loss, right? So it's up 5%, and right now it can be a possible good buy. Let's have a brief look at fundamentals. So fundamentally it has an operating revenue of 13,000 crores and it has an annual revenue growth of 26%. Pre-tax margin and return on equity is quite okay, but it maybe they're focusing on revenue growth, and maybe they're conducting their business activities with less margin. But going forward, who knows, the margins might increase, right? But regardless of if the company profits or not, we might actually be able to secure some nice profit because it has broke out from cup and handle pattern with the support of volume. Moving on to updates, how stocks we shared earlier, how are they performing, right? So talking about HCG, so earlier I told that we can sell the stock if it closes below 20 simple moving average, right? But right now it's sustaining and it took support from 50-day SMA, right? And hence the market are showing strength. We can wait for it to close below this 50-day simple moving average. So I'd rather say, or what I'm actually doing is holding the HCG stock. It's taking the support over here. It was also taking this support over here when we recorded the video last time. But right now, if you want to exit from it, you can consider to wait for it to close below this 50-day simple moving average. Regarding fundamentals, we talked about it in this video about stocks of the week, right? The video which we recorded last time. Moving on to Alicon. So Alicon seems to be closing below this breakout point. It broke out from this inverse head and shoulder. It seems to be closing below it. But once again, if you want, or if your risk appetite is high, you can consider to wait till it closes below this level, right? So it's all up to you. You can book the loss right now because it will probably close below 20-day simple moving average as well as this breakout point. But if you want to take chance in it, you can wait for it to close below this 50-day simple moving average, right? Moving on to Hariom Pipes. So it broke out with the support of volume from this zone of 304. It broke out from this cup and handle pattern formation or a VCP formation, whatever you want to call it. and since then it is up by around 13%, right? Just basically a week since we talked about this stock and it's already up by 13% and at least beats the index return. Nifty 50 gives 13% annually, but this stock has beaten the index return in just 7 days, right? It's trading at 343 right now. So like it's just an hold right now, right? When we find good stocks, we just hold on to it until it gives a reversal sign. What about reversal sign? Let's talk about with the example of IRFC. So IRFC, just like I mentioned, I booked some partial profits, right? I booked some profit over here and then I booked some profits over here also, but then it gave this bearish engulfing candle, right? So this candle, when it completely covers the previous green candle, we call it a bearish engulfing pattern. So then I completely got out of my position. Why? It still has the potential to go up, but it just went up vertically right there. So some pullbacks are about to come, right? So every time a stock moves in a straight line, some pullbacks are expected. So I thought to wait a bit and maybe re-enter if it tests this once again the 20 days simple moving average, right? Or I might take some entry if it tests this 10-day exponential moving average, but it's quite a bit extended, right? Especially from 50 days simple moving average. So just to be on the safe side, I got out of all my position from IRFC, but IRFC gave us 45% returns. Hariom Pipe gave us around 13% return. So like in every video, I give my 110% to share with you a stock that can be your next multi-bagger, or that can give you the return that can beat inflation, or at least it can beat the returns given by index, right? So subscribe to the channel, like this video to motivate me to produce more and more such video. And if you want me to make videos on some specific requirements, do let me know in the comment section below. And to get the update on the fastest way, you can join my Telegram, as well as you can follow me on Twitter. I will share the links of those social media handles in the description box below.